Some do say
it comes
that.
out of nowhere.
Taxes are fake news. So there's the main topic. We'll get right into it. MPW. Stubulo, since you're an actual MPW shareholder, you've done your proper due diligence. Give your thesis.
So I've been looking into it. As everyone might know, they own a lot of hospital real estate. They have about 10 billion in debt. Apparently, according to their balance sheet, 19 billion in assets in hospitals. The management are very adamant that they actually get their properties have a bigger value than what's on the balance sheet. There's also a lot of allegations of fraud. I don't believe any of them. I've looked into Viceroy stuff and Hedge Eyes, then I compare it to the litigation that MPW did against them. And if you actually look back in the old 10Qs and stuff, the stuff that they say wasn't disclosed was actually disclosed. But I would say it was a bit convoluted because they don't really refer to the names of stuff in the 10Qs and stuff. So that's basically it's too cheap, basically.
Double D's, what's up? Oh, Double D's.
All right, well,
fun.
For me, what I do have to say is obviously, it could, before I say what I have to say, it could turn out well for you guys. You guys could do very well, generate great returns. It could happen. I'd say it's 50-50 that it does happen.
Guarantee 10x.
It's 50-50. 50% that happens, a 50% chance. No, but I think that, with MPW, I think they just have a lot of debt on their balance sheet. That's one thing. And they have about over $10 billion in debt. The company's been struggling with their largest tenant. One could even say, their largest tenant, Steward, they're struggling to pay the rent. And that's obviously a bad sign if your largest tenant cannot pay your rent and you have $10 billion in debt in the balance sheet and the company is not generating profits. They're not collecting rent. I really don't see it as a great investment, especially with the competition and also the regulatory risk with healthcare.
All right, got to fact check you on that. Just because they're not collecting 100% of the rent from Steward doesn't mean they're not collecting any rent from Steward. That's a little bit of a red herring. They are still collecting rent from Steward.
Do you know what percentage?
Steward is only behind what, 50 million?
50 million apparently.
Yeah. And what's $50 million in the scheme of things with a company that's got, like you said, 10 billion in debt and 19 billion in assets? $50 million is
actually. It makes the market cap go from 10 billion to 2 billion from 50 million.
Well, I mean, I'd question the value of those properties if the companies can't pay off the full rent, unless the rent is outlandishly high, which I don't think it is. I think if the companies can't pay rent with such a in-need property, what does that say about the property? The property's purpose is a hospital. The purpose is to generate profit from that hospital. And if they can't pay the rent in full, it kind of raises that question. So saying you're going to get the full value of the assets, I don't know if that's going to happen.
Well, from what I could tell, the way their leases are structured, I'm pretty sure they're going to get their money back, even if Steward goes down, because they're one of the higher people up in the hierarchy of all the debt and stuff. So
Pipeline. I mean, did you want to tell them about Pipeline?
Oh, I'm not sure what is Pipeline.
Okay, so Pipeline was a different tenant that they had that actually did go bankrupt, and they're still getting paid by Pipeline for the rent that because they fell behind on rent, went bankrupt, got restructured, but continued to operate the hospitals that MPW owns, and they are still paying off that rent to this day, even though they filed bankruptcy. MPW isn't out the money.
Oh, I feel like I've seen something in reference to that, but I've not seen.
It was in the lawsuit. They mentioned it in the lawsuit because, again, the short sellers are catastrophizing about Steward, right? And they're pointing out that, hey, even in the event of something catastrophic happening to a tenant, we're protected, essentially.
Yeah. I'm pretty sure they will get the rent money. Plus, it seems insignificant anyway, the rent money. 50 million to get back compared to 10 billion in debt. I almost suspect that the market might not even care about the tenants. I don't know. I can't make my mind up. It seems
we're gonna get into valuation later. Trust me.
I have a point to make though.
Oh, okay.
The company's currently trading at less than $4 a share. Right now, the interest rates are high. that does raise a question where if they need to raise capital by diluting the shareholder, they're going to be raising it at such a low price.
I mean,
Like,
also
they're
to
not
be fair,
going to be
most
getting a lot of
REITs
capital
do-
from that.
to be
much.
fair, most REITs do dilute the shareholder.
Yes.
So
But I'm
that
saying
doesn't take away from your point. Yeah.
I'm also no. I'm saying I know most do, but I'm saying at the current price, you're not getting as much of a return as a company like Vici or Realty Income, where even though they've traded down, they haven't traded down as much. I think that if you're diluting the shareholder at that certain price, you're going to be getting a little bit less return on your investment.
MPT isn't going. In my view, they're not going, and they haven't diluted since. Like, I don't think they've diluted since like
dividenddata.com.
2021.
Use my link in the description.
Yes, but I'm saying if they need to, because
it's not an option for them. The cost of equity is too high.
Yeah,
it's not a lever right now.
From so when I was looking into like all that debt on like the S&P Global stuff, it's like, I swear it's like 97% of the debt is the unsecured debt, which is that BBB plus rated one. And on their earnings call, they did say they were looking into secured debt, and they said on the October earnings call, they said in 3 to 4 quarters that they're looking to raise $2 billion in liquidity.
Yeah,
so
this is recently over the last
you know,
2 years, shares outstanding wise.
Yeah, I wasn't saying that they were. I'm just saying if they need to, it's
it's not an option. I think that's actually one of the big problems that I think's made it go down even more, because the market knows that they can't issue shares, so it becomes like a positive feedback situation downwards.
Yeah. So
they can't pay
both of you guys are just buying MPW. Just is the main reason just due to valuation? That's the main reason?
Yes.
Right.
It's too cheap.
It's
not the dividend.
It's grotesque. It's literally like grossly undervalued.
Yeah, it's the craziest thing I've ever seen.
How real are the risks to you guys?
I mean,
low to me.
Like it's not zero. Like I'm not gonna say that the risk is zero, but I'll just say that it's disgustingly exaggerated by the market in my view.
I do remember, Fiscal, when you started your channel, I believe like last spring, I remember you mentioning MPW, and I remember it was like trading around the $10-12 range, and I actually bought it for a school competition or whatever. We were doing like paper trading, and I came in like 4th place regionally. I swear to God, right hand to God. To pause into the
basic stock mo. I win regional stock trading contest.
Buy our course. 25 people in here, so smash the like button.
Fiscal, I like that video. There was like some Reddit video he posted. It was actually very interesting. It was actually probably one of my better videos Fiscal made. I was like very in depth on the lawsuits and stuff. But I just think like, why choose MPW? There's so many great companies out there, even companies at discounts. One could say Starbucks is a great company at a discount.
Right.
Like, why?
All I'm saying is MPW is great to me.
No, but like what you're talking about is getting a pretty decent company at like a 10% discount or something. We're talking about like an 80% discount.
But you don't think it's a value trap?
Well, why would we have thousands of shares if we thought it was a value trap?
I think the price could drop in half again, for all I know, go to $1. But I'm pretty sure that price is very disconnected from the company at this point.
To be clear, both of you guys aren't investing for the dividend at this point. You're just kind of taking what you get.
No, if they cut the dividend, I'd be thrilled.
Yeah,
if they got rid of it entirely.
I know the stuff with that. I don't think they can fully eliminate it, but I'm pretty sure if they could, they would.
I think actually with the write down they're taking on their next at their next quarterly, the one that they announced in January, I think they legally could cut their dividend because they'll show negative net income.
Yes, because somebody asked that in one of our comment sections in one of our MPW weekly recap videos, and if they can like legally, it was a comment from Kim Jong-un. I swear to God, that was his name. But in all seriousness, he asked like legally if they can cut the dividend. So Fiscal, I think if you want to answer that.
Yeah. So my understanding of the way REIT tax status works is they have to pay out 90% of what would be their taxable income, and that's going to be based on generally accepted accounting principles. So if per GAAP accounting, it doesn't matter what their funds from operations are because that's a non-GAAP measure. If they show negative net income, they should be able to eliminate the dividend legally. from my understanding of it. And I'm not a CPA, not an accountant, not an
We
analyst.
did mention a lot of
But-
stuff like that.
Fiscal, are you a guru?
Saying, even if
Yeah,
think
you
this
could say
will
I'm a
get
guru.
rent back,
Buy my
definitely
course,
put
bro.
it down.
Prime my course, bro.
Double
Oh
D's.
my
I
God.
heard you respond wow to the if they'd be happy if they cut the dividend. Would you care to elaborate a little bit there? Because I think we can both kind of get on the point where dividend cuts are never a good thing, but in this situation it might be.
I think a lot of people would buy MPW is for the dividend. I think a lot of people would see the 20% yield, and I'm not saying Fiscal or Stabulo, but would just buy the company for that dividend, or companies at like high yields. So I'm just like, both of them are not buying it all for the dividend. I was just a little,
Well,
thrown off.
it's because we see a disconnect because it's the balance sheet that we're looking at, right?
Yeah.
And and we want them to preserve as much of that balance sheet value as possible. And right now, what they need to do that is cash. And one of the easiest ways for them to conserve cash is to stop paying out hundreds of millions of dollars to shareholders.
We got Uncertified Financial Rouser, another good guest in the Discord and the channel, coming in saying, how much pricing power do you have with the tenants when they're going bankrupt?
Well, funnily, they have a lot of pricing power actually because of
Oh, come
their
on.
inflation protected leases. So they might get like in more arrears with the tenants, but they should still be owed more, I suppose.
I think, I think the pricing power, sure, they have a lot of price, but they could raise the rent if they want. But the ability for them to pay it off, I think that's where it comes in question. If you have your largest tenant, like I said before, that can't pay it off in full, may it be 50 million or whatever number, how much room do you have to grow that rent? Like, I don't see that you have that much room to grow it if people are starting to not be able to pay it off.
Well, their rent
Pretty sure it should be
escalators, right?
growing.
Their
Yeah.
leases are
So-
15-year terms with CPI-based escalators. It's not about them deciding year to year whether they raise it or not. It's built in to the master lease
Yeah.
agreement.
Yeah, but I'm saying, wouldn't that raise more issues in the future? If it's like automatically going up, wouldn't that like raise issues with other tenants being able to
To
pay
be
it off
fair,
if we're already seeing
it
one
should-
struggle to pay it off?
They should cut the rent 95%, so then they definitely get rent.
They might as well. Better
man.
press. We got dividend
Oh,
growth.
but and just to that question, what was it again? The
I'll
question.
pull it up.
Oh, a lot of the tenants are actually doing quite well. It's just like two of them. I think so. It's Steward Healthcare and Prospect, but I'm pretty sure the Prospect stuff's pretty much sorted out now.
Yeah, so Prospect was in arrears, but had a plan to get back to paying rent, and it was partial payments in the fall, which they, as of the last earnings, they were paying what they agreed, and it's supposed to be back to full payments by March, and they were getting equity in Prospect for the back rent owed.
So as somebody,
So,
oh my bad. So somebody who invests in a REIT that formerly was called, not a lot of diversification, Vici Properties back in the day. There was a lot of saying that, they own too much of the Vegas Strip. If the Vegas Strip goes down or anything happens there, they're basically doomed. And they basically big claim for diversification. I'm looking right now and it says 90% of MPW's rent is coming from Steward. Do you guys know if there's any plans for them to diversify in the future?
90%.
90%. No, that's way
wait.
off. It's 23%.
Yeah, no, wait, I lied. Yep, 20%. But still,
I think it might actually be a bit lower than that because I remember reading something about they like included some like of the stuff that got written off, so it will be like closer to 90% or something like that.
my apologies. Nobody come for my head after this. I apologize. Uncertified financial advisor comes in again. Do these contractual rent raises matter when the tenants struggle?
Exactly. That was my point, basically. Like, and also just in general, like if you have so many issues with a company, like I'm just like hearing a bunch of issues with the company, like the average person would want to steer clear of it. They wouldn't want to like jump into it. But I mean,
Exactly.
I just think that, it's kind of like a little bit odd to be jumping in a company like this when I think there's a good chance, maybe one could say a 50-50 chance that they go
50-50.
bankrupt.
Like that.
Well, I mean, the fact is that the fact that the average person is either selling out or avoiding is what created this unique value proposition to begin with.
And
Well,
I like what MPW are doing for the tenants, helping them out when they're doing bad. I think but they know their lease is like 15 years, as you said. As long as they get back onto the path, then that's fine. They've helped them out. It's helped kicking them out.
We also got another point while we were on the topic of share dilution and buybacks. Do you guys know if they are going to be buying back shares at those prices? I know me and Fiscal talked about if they were to cut the dividend and do buybacks. Kind of similar with 3M situation too.
I know that buybacks were something that they actually had approved up to 300 million for buybacks in fall of 2022. They approved like 300 million or something. I don't think they ended up using the vast majority of it. They did do like
that probably worked out better for them though.
If
you look at the shares outstanding, like you see like these tiny, like 0.5% or something reduction in shares outstanding. But it's definitely something that they've considered in the past. So I would think it could be something they would look at, because if they can't or don't want to eliminate the dividend, they're saving 20% on every share they buy back, right? And so they might decide maybe that's a good use of some of the cash that they're sitting on.
And for clarifications, in the fall when they approved that buyback program, if it was October 2022, which I would assume it was because they was on a decline then, it was around $10 a share. It's down 67% since then, so it would definitely make sense if they were to buy back more shares.
Yeah. I don't know how I would feel about them buying back shares, because on one hand it is cheap. I want to buy more, so in theory it's good for them to buy more, but they only have so much money and they have to sell properties to get money for the debt maturities. So it will be very difficult to tell if it's a good thing. It will increase risk. I would prefer them. Plus, the debt on the open market anyway is cheaper anyway, so they can buy back more than you would think.
Yeah, that is true. So they could probably buy back a lot of their debt at a discount compared to if they wait for it to mature.
Yeah, Digital Kunst was in here early, and he said, please ask Jordan how badly a zero on MPW would affect him.
Okay.
And
yeah, I'm just getting it up. So if it goes to zero, my 3,091 shares valued at, it's in pounds, £8,130. So
dividend talks is under the chat.
I am dividend talks. I'm undercover.
No, you're not shy. You're not.
All I'm saying is I'm stealing this later. This is going on my channel.
You better watch out. I'll put a filter on that thumbnail.
He's gonna replace us both with stock pictures of dudes.
Yeah,
he will.
I'll be dividend dude. Just change the background color a little bit, and that's it.
Yeah.
Oh man.
I hate to move away from MPW,